heart of where innovation, money, and power collide in Silicon Valley and beyond. This is Bloomberg Technology with Caroline Hyde and Ed Ludlow.
Caroline Hyde of Bloomberg's World Headquarters in New York. Ed Ludlow is in Sun Valley, and this is Bloomberg Technology. Coming up, the FTC loses its request to temporarily block Microsoft from closing its $69 billion takeover of Activision Blizzard. But what about the UK? We'll bring you the details. And Hollywood comes to a halt. Actors join writers in their strike, bringing productions of films to a standstill amid the first simultaneous walkout since 1960. Plus, as generative AI takes the world by storm, governments are scrambling to regulate. We sit down with Didier Reynders, European Commissioner for Justice, to discuss the steps the EU is taking to rein in, or just put guardrails on the technology. But first, let's check in on those markets. And again, we've got Bloomberg's Abigail Doolittle. Take it away.
Well, Caroline, we have another day of gains. In fact, a fifth day of gains for the S&P 500. The S&P 500 moderating its gains on the day. On the week, though, a strong week for the S&P 500 and the tech-heavy indexes, which are still doing well on the day. That NASDAQ 100 up about 0.7%. The New York FANG index right now on the week up about 6%. Today's 1.1% contribution helping out. China tech, though, not so much, at least on the day, down about 2%. Now, one driver, of course, for the tech strength on the day and on the week is the fact that the Bloomberg Dollar Index into today down in a big way and yields down in a big way. You can see that that two-year yield on the week down about 20 basis points. That makes the valuation on tech stocks in particular look more attractive. It makes it more tenable. And the Bloomberg Dollar Index, any risk asset denominated in dollars, well, when it goes down, they tend to go higher. But something I would point out, the VIX on the NASDAQ 100, well, it is elevated. It's at a 20 handle. On the VIX for the S&P 500, it is at a 13 handle. That spread tells you that some investors are worried about technology taking off. And in terms of what they might be worried about specifically, if we take a look at the gains on the week for technology stocks, well, for the most part, we have NVIDIA and Microsoft showing you what most of the tech stocks are doing on that boost from yields and the dollar. But I would point out, Caroline, Apple right now down for a second week in a row, the first time we've seen that since early January, and Cisco also down. So there are still some mixed signals to take into account, especially given the fact that Apple is one of the largest weightings to the NASDAQ 100 and is the largest weighting to the S&P 500.
Not everyone's a winner right now in the stock market. And look, when it comes to legality, not everyone's a winner. Again, the FTC losing its request for a California judge to temporarily block Microsoft from actually closing that $69 billion takeover of Activision Blizzard. That's, of course, while the agency appeals her initial ruling to greenlight the deal. Bloomberg's Ed Ludlow joins us now from Sun Valley. You are helping break those scoops, not only about what's happening in the UK, but just bring us up to speed with the fact that, look, this date, her 18th, is hurtling towards us.
It is. Yeah, there are lots of moving parts. I think the big umbrella point is that sources tell Dina Bass, Leah Nyland and myself that there's a high degree of confidence that this deal will close by or on Tuesday, July 18th. The development of the last hour is that the UK Antitrust Appeals Court has called a hearing for Monday, the 17th, where they will hear Microsoft and Activision's appeal against the original UK CMA decision. But remember that all they can appeal is an issue of procedural impropriety. They can't challenge the decision itself, just how they came to that conclusion. Now, what we reported last night is that what they're offering to the CMA as an appeasement is to sell the rights for cloud-based gaming in the UK to a third party, another media or telecoms company. One source suggested private equity could be involved. And what we're hearing from the merger arbs, if that's it, if all they have to do is go to the UK CMA and say, well, we'll sell the rights for cloud in that country, it's a small price to pay to get the deal done.
But to a large extent, of course, yeah, they don't want behavioral changes. They want actual sales, yes, or real impact. What about what's happening in the US? Because if they do sell off those rights in the UK, will they not have to replicate that elsewhere? And what will the FTC continue to do in terms of its own appeals process?
It's just so strange how all of these different dates and timelines run in parallel. So what we're waiting on is the 9th US Circuit Court of Appeals to decide whether they put a stay on proceedings, right? This is the appeal the FTC made to the US District Court in San Francisco, the decision made July 10th. But if that stay doesn't come, the deadline in the US is midnight San Francisco time tonight, or 3 a.m. Eastern time Saturday morning. So you could have a situation where the deal closes technically here in the United States without any regulatory inhibition or prohibition, and then still have the CMA process going on in parallel. Beyond that, what I'm hearing here in Sun Valley is no one really gets what the FTC is doing, and I think you've got a great guest coming up. You can ask her this. Why are they picking a fight that many think they can't win anyway? And so it's coming down to the wire, but that's why we love this story.
Yeah.
Things that come down to the wire, Caroline.
Bit of drama. Ed, you're going to keep the drama flowing from Sun Valley. We thank you very much indeed. Let's get to that great guest, of course. Maureen Ohlehausen, former commissioner of the Federal Trade Commission. She's now chairs the Global Antitrust and Competition Practice at the law firm Baker Botts. It is great to have some time with you, Maureen. And boy, it's complex. Can you just answer that initial perspective from Ed? Why is the FTC appealing this? Why take these challenges that are very hard to win?
The current leadership of the FTC has decided that they want to try to move antitrust law in a different direction than the courts and the agencies have brought the law for many years. Antitrust law in the U.S. is common law. It's interpreted case by case. And they've decided that they want to go in a kind of a starkly different direction. So they keep bringing forward cases with their aggressive theories, but the courts are not finding them convincing. They're not finding them convincing on the facts sometimes, and I think in the Microsoft-Activision challenge, on the law and certainly on the economics. So I think the leadership feels that they want to try to push the boundaries, but the courts are just simply not amenable to that. The courts look at what's the precedent, what's the case law, what are the standards that are already in place.
Ultimately, they're worried that these sorts of vertical deals can ultimately end up just with companies having far too much control and indeed monopolistic sort of outcomes. Do you have any sympathy for that at all, whether or not we see the law as it stands being sympathetic to it?
If there is good evidence that a merger, whether it's a horizontal or vertical merger, may substantially lessen competition, there's a strong basis in the law to block those deals or to have remedies in those kinds of deals that preserve competition. When I was the chair, we brought some vertical merger challenges and we had settlements in those. But I do think the law certainly prohibits it. The question is, do they actually have the evidence to convince a court that the deal, whether it's a horizontal or vertical deal, will actually meet that legal standard? And the government bears the burden of persuasion. They have to persuade the court that it would substantially lessen competition, and they just haven't carried that burden.
What about Congress weighing in here more broadly? And some have been saying, look, as it stands, the way in which we interpret the law isn't right, and the way in which we see competition is outdated. Do you think that that's the case? Do you think we would ever see the ways in which we judge the legality of such deals being altered by Congress?
There has been some interest in members of Congress in changing the law, but it just hasn't gotten the support of the broad membership of Congress to do that. Look, antitrust law is not static. As economic learning, as our understanding of markets, as markets themselves change, antitrust law, the case does need to change too. And it's generally been done through case-by-case enforcement. And we've seen those developments. We've seen, when I was at the FTC, winning cases before the Supreme Court that supported our enforcement efforts. So it's not that the law, the current law is totally static. But to make this sort of big break from showing what's a substantial lessening of competition or departing from the consumer welfare standard, which is really the lodestar for antitrust, would necessitate a new law in Congress. And we just haven't seen the momentum for such a law to pass.
No, your expertise is so important to us because you were the acting head of the FTC under the Trump era, but I'm interested in your perspective overseas. What do you make of the UK and the way in which we could see further sales be forced of Microsoft and Activision in this particular instance? And ultimately, would that mean that would have to be done worldwide?
Well, it really depends. The CMA's authority is only for impacts in the UK. So that would be very sort of fact specific and market dependent on whether some sort of remedy that was limited to the UK would address those concerns. But the CMA is kind of out on a limb at this point, right? It's the European Commission cleared the deal. The US thus far has not blocked the deal. It's been approved by regulators around the world. So I think, they're in a very interesting position. And is there some sort of last minute remedy that will, assuage their concerns and allow them to approve the deal? I think is something that's I assume is under intense discussion, given the state of play.
In your current role, chairing the global antitrust and competition practice at the law firm Baker Botts, what are you advising clients in this current environment we're currently in? Do we think that deals have got harder to be done or not?
It's kind of a twofold question. The process of getting your deal done, the approval process, is likely to be more onerous and take longer. You may have to produce more documents. You may have to, sort of engage in theories that weren't really strongly supported in the case law, but if the regulator brings them up, you have to talk about them, you have to address them. But ultimately, what we're finding is if the deal makes sense, if it's pro-competitive, our recommendation is you should go forward with it. The law itself has not changed. And that's, I think, what we're seeing in these repeated failures of particularly the FTC to win these challenges. So ultimately, for clients, that's what they need to decide. Are they willing to kind of go through a process that has been made more onerous, specifically made more onerous, I think, to try to deter some mergers, even if they can't win in court by saying they're anti-competitive. But if a merging party is willing to go through that, they have the same chance that they had in the past of winning if there is an appeal, because the courts are sticking to the case law and the requirements that were already in place. They're not buying these new theories.
Former acting chair of the FTC and indeed FTC Commissioner Maureen Ohlhausen, thank you very much indeed. Some great expertise there. Meanwhile, coming up, the court cases keep on coming and the losses. A federal court decision on a crypto case involving Ripple Labs, seen as potentially narrowing the SEC's oversight. More on that why next. This is Bloomberg. Oh, it was long awaited. The ruling came in the case for the SEC versus Ripple, and it sent crypto Twitter into a frenzy and token prices soaring yesterday. The ruling, XRP, the token associated with Ripple, is a security, but when offered to institutional investors, not the general public. Bloomberg's Shonali Basak is here to break down what is a nuanced ruling, about 4 different parts of it. But the takeaway for many is that, look, the SEC perhaps doesn't have so many grounds to stand on here.
Well, importantly, I think, is that the individual investors' means of purchasing Ripple was deemed not a security through the use of buying them through public exchanges. And so remember, when the SEC sued Ripple and its founders here, they were really suing on the basis of more than $1 billion worth of sales, and about half of that is covered as not a security by this lawsuit. But the other half, the institutional sales part, is also worth looking at. With the retail part, it is interesting because when you look at all the suits put together by the SEC, there are more more than a dozen tokens really listed here by the SEC as alleged securities. And so when you're talking here about the idea that maybe the SEC doesn't have so many grounds to stand on here, it's of those 19 or so tokens that we are talking about. Are they securities? Aren't they securities? If they're listed on exchanges, are they still securities? That is a fight that's going to keep on playing out. You saw Coinbase's stock yesterday react with a 25% jump almost here. That has brought Coinbase's advance this year to almost 200%. And it is on the grounds that they are fighting also the SEC on this idea that they had listed all these unregistered securities. And so the exchange, Coinbase in particular, was very, very quick to move on relisting XRP and, in vein of what the court had said.
Fascinating, and we will continue to see the ramifications. Solana's up a lot today on the Binance token as well, whereas perhaps we fade a little bit on Ripple's initial move. Shonali is the busiest woman in the house. Of course, she's just been doing all of the bank earnings and still across this. We thank her. And of course, just a note that my husband is a senior manager over at Coinbase. Meanwhile, you want to stick on this story, you've got to stick with Bloomberg, because you want to hear from the Ripple Labs CEO, Brad Garlinghouse himself, as well as Pat Toomey, former senator of Pennsylvania and member of the Global Advisory Council over at Coinbase. Those two conversations with our own Shonali coming up in the next hour. Meanwhile, turning to a loss in the tech community. Entrepreneur Nick Hungerford has died after a battle with terminal bone cancer. Mr. Hungerford co-founded the successful investment platform Nutmeg in 2011. The idea was famously rejected 45 times in a row by funders, but the business went on to strength, was bought by JP Morgan in 2021 for a reported £700 million. Nutmeg said in a statement that Mr. Hungerford was one of Britain's most successful fintech entrepreneurs. Nick Hungerford was 43 years old. Major League Soccer, I mean, I call it football, but you call it soccer, could be the next US sports league to allow sovereign wealth funds to invest in its teams, with the league's board members set up to discuss the topic at a meeting next week in Washington. That's all according to the MLS commissioner, Don Garber, who sat down with our own Ed Ludlow over there in Sun Valley. They discussed this, how the league attracted Lionel Messi, and their Apple TV partnership. Take a listen.
Obviously, an enormous amount of money that includes not just what he gets paid, but the uniqueness of our league. Having a partner in Apple that can share in helping us attract someone like Messi. Partnership with Adidas, who can come in and be part of that program.
Was that your idea?
It was our idea. The league does all these unique things. When we've talked about David Beckham and the uniqueness of that deal, we've got partners in the league office in terms of how we're structured, and a very ambitious owner in the Moss family in Miami, putting together a deal that I think was more attractive to Messi and his family than playing in Saudi Arabia or going over back to Barcelona where he'd been before.
You mentioned that this was a competition between Saudi Arabia. My understanding is Barcelona are also thought to bring their son home. You won. What was the one biggest factor that brought Messi to the MLS?
You know, America's a rising soccer nation, and our league is driving a lot of that momentum. And you get a generational player who has an opportunity to not just have a legacy as the best player, the GOAT, if you will, but also be part of driving enormous momentum for the years leading up to the World Cup. Copa America will be here next summer. The FIFA Club World Cup will be here in 25. U.S., Canada, and Mexico will host the World Cup in 2026. And Messi will be the continual part of that narrative. He'd make a lot of money in Saudi Arabia, and I'm sure that was attractive to him. Go back home, as you said, a favorite son.
You raise a great point, though, in that Saudi is so present in professional football, soccer. Have you met with the Saudis about investing in the MLS?
No, we haven't, Ed. But interestingly, years ago, when they were forming their league, we did the same with the Qataris. We advised them. You know, MLS has a unique structure. It was an emerging league that had to capture this unique opportunity. The Saudis are heavily invested in trying to make their league more successful, more popular. The Saudi folk, the people who live there, are very passionate about the game. The Chinese have tried to do that with the president, try to make football a big part of the unique experience for fans. We'll see how it all plays out. It certainly is an intriguing disruptive part of what's going on in our sport.
Are you broadly open to sovereign money investing at a franchise level or in the league?
We are, and beyond the uniqueness of our structure, where we have private equity investing in our league, Ares Capital invested in our Miami team just very recently, but the NHL and the NBA have looked at having sovereign funds and pension funds. MLS looking at the same thing. Very timely news. We'll likely discuss that at our board meeting in in D.C. next week at our All-Star game.
MLS Commissioner Don Garber with our own Ed Ludlow. Now, from sports to movies, it's all entertainment, hey? For the first time in 6 decades, Hollywood writers and actors are on strike at the same time. A cataclysm for hundreds of thousands of film and TV workers. Look, Bloomberg Technology Executive Editor Tom Giles, I'm so pleased to say, joins me now to really what we sort of saw coming. It feels dramatic. We had actors walking out of premieres for the latest movie over in the UK.
Oh, yeah. I mean, as you said, the first time in 6 decades, this is all about how technology is disrupting the way that films and television are produced and distributed. 60 years ago, it was all about this new thing called TV, a relatively new thing called TV, and what it meant for the distribution of films that were traditionally shown just in theaters. Now, it's all about streaming. This is a question of, are actors, writers compensated adequately when their work is streamed on all these new services? There's been this proliferation over the last decade of different ways that you can watch and save and distribute films and television shows. And pay structures, the actors and writers will tell us, have not kept pace.
Yeah. I'm seeing some placards being held as we're currently looking at our screens now, Tom. Some of them mentioning AI. You and I talking about AI left, right, and center at the moment. Why are the actors talking about it too?
Yeah, I mean, is AI going to replace our jobs? We think about it as journalists, right? Will the AI, put us out of work? What actors and writers are concerned about is the ways that studios might use artificial intelligence to create scripts, to, even the imagery around, can somebody's face be put on a different body? How can we use this technology to reduce the cost of writing, producing, getting these programs out into the public? And is there a way that it's going to kind of make actors' their bodies, their faces, in some ways obsolete? These are all somewhat hypothetical at this point. There's a lot of skepticism over exactly how far you can rely on artificial intelligence to create these products. Yeah. But it's a concern.
Tom, great speaking with you. Thank you. Bloomberg Technology Executive Editor Tom Giles on the drama in LA. From New York, this is Bloomberg Technology. Welcome back to Bloomberg Technology. I'm Caroline Hyde in New York. Let's get a check in on these markets to end the week, a week of a rally that we've had. We're just dialing back a little bit, perhaps, on the enthusiasm on the S&P on the day, but the Nasdaq 100 continues to charge higher, even as we see consumer sentiment pick up, actually the highest in 2 years, even as we see those inflationary expectations dial up a little bit for those consumers too. The overwhelming sense of certainly what we heard in mood music from the CPI, the PPI data earlier in the week just means that the Federal Reserve perhaps doesn't have to hike past July. And boy, there's a relief rally going on. We saw it in the bond market today. We just tick up again 11 basis points. We were screeching lower on the 2-year yield. Sometimes it was one of the best weeks for 2-year bonds that we'd seen in months. But currently at 4.74 at the moment. So we just tick higher a little bit on the back of that sentiment data. XRP, USD, I show it, Ripple down 8% after a mega rally yesterday of almost 70% after we, of course, got the reaction from a court saying, look, the SEC, perhaps you are wrong when you're overseeing some of these crypto assets. They deemed them not securities when sold to a retail investor. Let's move on and have a little look at what's happening in individual names, because I'm looking at the analyst notes today. Microsoft being a bit higher, 1.3% as UBS likes the stock, still adding to it. Nvidia up 2.3% as Truist is coming out saying, look, you can raise the price target on this. They're going up to $545 per share at the moment. We're still at $470. AT&T, though, on the downside, of course, telecoms giant falling to a 29-year low. This, as we understand, there's concerns about cleanup costs regarding lead that was purportedly used within, of course, potentially some of its sheathing on legacy US phone cable networks. Some concerns about liabilities there. Meanwhile, let's turn now to social media. This week's Meta competitor to Twitter saw, 100 million users now on the Threads platform? But is it here to stay? Are we still seeing that enthusiasm continue? I'm pleased to welcome to the show Lauren Schnipper. She's Vice President of Corporate Development at Jelly Smack, a company focused on amplifying content creators. Also, you're host of the Creator Upload podcast and previously ran creator partnerships for Facebook. I'm also welcoming Bloomberg's Alex Barinka, who can perhaps first and foremost give us an update on what it's like on Threads at the moment. There was so much hype and enthusiasm last week. Are we starting to see that dial back a little bit?
We're seeing maybe a little bit, Caroline. When I first logged on, there was a lot of folks with a lot of curiosity, and maybe those were curiosity signups saying, what's this all about? I asked, what's the vibe? Right now, the vibe seems to be in my thread, a lot of memes, not a lot of news, so a distinct difference from what I see on Twitter. But just in the last 24 hours, we've actually gotten some data from some data analytics firms like Sensor Tower and SimilarWeb, who are saying that maybe some of that initial curiosity excitement has fallen off. They're saying that traffic has fallen by about 20% from last week, that usage time is down to 8 to 10 minutes from 20 minutes last week. So that initial bump in curiosity is maybe not leading to at least a month's worth of extended engagement of what we're seeing on Threads right now.
Well, let's get a take of someone who's helping advise all these creators. Lauren, is the enthusiasm there? Is it real? Are they wanting to take part in the conversation somewhere other than Twitter?
I mean, I think absolutely. I think that the time, first of all, nobody, when done right, nobody does a launch better than Zuck. I mean, it has been glorious, this launch, right? The seamlessness nature of it, the golden ticket. If you search Threads in Instagram, a golden ticket comes up and then it takes you to the app to download. Everybody I'm talking to and everything I'm seeing is saying, like, it really is living up to this promise of a more friendly sort of environment, which is what Zuck and Masori are sort of trying to promise. Now, whether or not they can maintain that, there's so many. We've seen that Facebook Meta knows how to grow platforms. Do they know how to manage them? I don't really know. But right now, not really seeing a lot of drop off sort of anecdotally. I think it's totally to be expected that you get that initial curiosity and a little bit of like a downturn right after. But like even the numbers Alex just mentioned don't seem, in my opinion, to indicate that this is going away anytime soon.
And Lauren, I am curious, as you're talking to creators, obviously we've seen them navigate to platforms where they can continue to build their business. Being fun is great, being curious is great, but over the long term, creators have this herd mentality. They go to where the money is or where the audience is. What are they seeing in Threads right now? Like, what are those kind of draw points? What are the shiny objects that you're either seeing right now, or this kind of long-term promise of what Meta can do gets them excited about the Threads platform?
Well, the long term, you know, as you said, it's where everybody is kind of right now, right? Like, and I don't think anybody was excited about Twitter. And also, you have to remember that like Threads is being built on the back of both Facebook and Instagram. We used to always say when I was in Instagram, like we used to get to sort of like, you know, learn from the mistakes of Facebook. Now Threads gets to learn from the mistakes of both Facebook and Instagram, which is like a pretty solid place to be, not to mention the incredible, you know, ad sales infrastructure that Meta brings along to the table. So I think that in just very early conversations, people are confident that there's some sort of monetization that's probably being thought of. And I can't imagine that's not true on sort of the Meta side. So right now, you know, at the very least, it's about distribution. And because you can port over your followers and, who you're following, from Instagram directly, therefore people are going to be following you, you know, faster than they would on a brand new platform. Like creators, to your point, they're going where the people are and they're there. So they're very curious. I mean, you've seen Mr. Beast is, I think, giving away a Tesla for everybody that follows him. Maybe we'd all have hundreds of millions of followers if we gave away Teslas. I don't know. But I think they're all there and they're excited right now.
And talking about what's exciting right now, you have Musk maybe keying into some of this excitement. Just in the last 10 minutes, he responded to a tweet on Twitter asking him whether he would actually bring in photos and captions to Twitter. And he said it's definitely a feature we should consider. So as we see kind of the continuation of these platforms, maybe lifting some features from each side, how are creators thinking about differentiation when it comes to the folks who are both on Twitter and are on Threads? Are there things that are core to the platform that have them thinking about those two things differently? Or is there some efficient cross-posting going on that's helpful on both sides?
Well, I think first of all, also just, Elon taking advantage of like launching monetization in the last like couple days. I think that was actually really smart of him. Do I think that that's like a great idea considering there's no trust and safety on Twitter right now? I mean, I feel like monetization plus no trust and safety is like kind of a disaster waiting to happen, you can imagine. In terms of, listen, I think that right now, and of course, Jelly Smack My Work helps creators with this, having to post on different platforms and different types of content is a really big sort of, burden to creators. And so anything that anybody can do to offset that is always welcome. In terms of cross-posting to both platforms, too soon to tell, right? I think what we are seeing, though, it's a different kind of, creator user on Threads versus Twitter, right? Like people on Instagram weren't necessarily on Twitter or power Twitter users. So I think it's a little bit too early to tell in terms of like how that content's going to sort of overlap or not, but I definitely feel like creators are on Threads. If anything, because it comes from Instagram, I think by the very nature of that, it seems to be a bit more creator friendly of a platform, at least from a perception point of view right now.
When are you thinking that the advertising gets turned on, Lauren?
Well, much sooner than later. I do think that I would hope that they are thinking about their own trust and safety and how to moderate this. Again, learning from the mistakes of the past, I know that they're going to move quicker than they ever have before. I mean, I was at Facebook before monetization was there at all, and that was just really painful waiting for that to come out. They have so much more infrastructure. So I think within the first year, if not, even sooner, you're going to see some sort of monetization. But I think they need to first they have to launch ads first, right? So that's going to happen pretty soon, I imagine. And by the way, let's talk about brands. Brands are flocking to Threads because they've left Twitter because of the lack of trust and safety. They can't risk their brands being next to really sort of undesirable content. So you've got brands like Netflix, Lyft, Wendy's, Spotify, all these brands that are just flocking to Threads to build up their platform. And with the brands comes the money. Monetization soon follows.
With your analysis of all the places your content creators could be, I mean, we have heard a relative amount from Twitter recently under the new leadership of Linda Yaccarino about brand safety, trying to ensure that those advertisers get back on board and get comfortable. Are you really still seeing reasons to be as concerned as previous at the moment? And do you think that what we're talking about is people leaving in droves, or is the reality actually that?
Leaving, right? Whether I don't know if they're deactivating, whether or not they're posting or spending as much time there. Listen, she's there to solve this problem, but the problem is she really CEO, right? Like Elon's not sort of backing down on anything, and so time will tell, right? Like she's a pro, she has the relationships with brands, and so I believe her that is like her number one goal. I don't believe necessarily it's going to happen.
Linda Schnipper of Jelly Smack and our own Alex Barinka. We thank you so much. Great conversation of the social media war still going. Meanwhile, coming up, we're going to have plenty more regarding actually some of those content concerns. We're going to get it from over in the EU. That's next. This is Bloomberg Technology. Time now for Talking Tech. First up, US shoppers, you spent $12.7 billion online during Amazon's 48-hour Prime Day event, up 6% from a year ago, but short of estimates for 9.5% growth, according to figures from Adobe. An increasing share of customers are actually using buy now, pay later services. Adobe said, look, that's indicating that shoppers are perhaps concerned more about the economy. Meanwhile, OpenAI has lost another board member with the departure of former Texas Representative Will Hurd, who announced at the end of June that he is entering the field for 2024 presidential candidates. Now, Hurd is the third director to lead the ChatGPT makers board this year. Plus, well, Stability AI co-founder has sued the company claiming he was tricked into selling his stake, forget this, just $100, months before the British artificial intelligence startup hit a $1 billion valuation. Now, the co-founder said he sold his 15% stake in the company to another co-founder, claiming he was led to believe the company was essentially worthless. Meanwhile, over in Sun Valley, our own Ed Ludlow has been catching up with 23andMe CEO Anne Wojcicki to talk about everything from DNA decoding to the future of health to the human genome. He also asked her about the integration of Lemonade Health after its acquisition in 2021 and about the synergies between the two companies. Take a listen.
I have 14 million people who have 23andMe.
Yes.
And if they have questions and they want better information about how to integrate this into their actual health care and stay healthy, we have access now to physicians who are specifically trained on genomic medicine and specifically preventative genomic medicine about how to take that result and you're higher risk for chronic kidney disease. You have a genetic variant about a medication and you're suffering from depression. What's the right medication for you? All of that. And I now have a clinical team who knows how to do that. And the brilliance of Lemonade is that it has a pharmacy. So specifically on areas like mental health, where people really are struggling and finding the right kind of medication to manage it, I have a clinical team now that understands genomics, they understand pharmacogenomics, the right, your genetic variant and the medication that might be best for you to start on.
As a piece of business at a basic level, is it making money for 23andMe?
Yeah, Lemonade, when we bought it, is largely focused on more of the, consumer areas like hair loss, erectile dysfunction. So that's a core business, and that is
it exists.
It exists, and it's an exciting business, and it's something that we see. It tapped into the fact, like very similar with 23andMe, is that there's a consumer component of healthcare. You see this right now with all the GLP-1s and weight loss. People want to be more and more in control of their health.
Yes.
So whether it's about something like erectile dysfunction and weight loss or hair loss, or it's about, how do you actually stay healthier longer, there's a great synergy between those two. So that business continues to do well and continue to thrive. And now we're going to be adding on really, 14 million customers from 23andMe. How do they get access to the Lemonade services, as well as Lemonade clinicians and services? How are they better integrating genomics?
And is there anything that you think you could go out and buy or acquire that will further sort of increase the value proposition, or just give 23andMe customers access to more ways to use the test that they took?
Well, the exciting aspect for me is post-pandemic. Like, so many things have come out of that, but people are used to telemedicine, and they frankly are more and more used to, like, you're on your own on health. Like, it's really, people struggle at understanding payment, they struggle at finding doctor's appointments. So more and more people are on their own. So there's this huge opportunity for 23andMe to more and more offer a, vertically integrated system of, like, how do I actually really help you? I have the pharmacy, I have a phenomenal team that knows, like, can ship right away products that you actually want. So how is it that we can really be that leader in keeping you healthy as long as possible?
23andMe CEO Anne Wojcicki there with our own Ed Ludlow. Some breaking news on Tesla tapping the ABS market, of course, asset-backed security market, for the first time since, well, they exited the world of junk territory. Remember, back in March, Moody's assigned a investment grade rating to Tesla of Baa3, joining the likes of S&P that had the BBB. So we see it up more than 2% as they start to tap the debt markets, this time an asset-backed deal worth about $1 billion, we understand, in pre-market. From New York and from out there in Sun Valley, this is Bloomberg Technology. The EU and the US this week agreed on a new data privacy framework, which will allow businesses to transfer data from the EU to the United States in a secure and compliant way. But look, the new agreement already faces the threat of legal challenges from privacy activists who are, again, unhappy with the level of protection offered to European citizens. Here to talk about it and more, I'm very pleased to say we're joined by Didier Reynders, the European Commissioner for Justice, who helped broker this deal. And therefore, how confident are you that we're not going to see Meta and some of the other key big tech companies plunged into this sort of legal vacuum again?
Of course, it's very important to have a legal certainty for all the participants, so the big companies, not only in the US, also in Europe, to be sure that it's possible to organize a data flow between the European Union and the US and vice versa. And I'm very pleased that now we have had the opportunity to take a decision. In fact, considering that the protection is traveling with the data, so we are sure that we have the same kind of protection in the US than in Europe about the access of the intelligence community to the personal data, and concerning also the possible redress for the European citizens if they have some concern about the access of those agencies to their data. So it was a long, long journey with many negotiations with my counterpart in the US. But at the end, we have a very good and robust solution, I'm sure, to give, again, a legal certainty to all the participants.
But Mr. Max Schrems, of course, who's taken down previous versions of this, isn't that happy. Are you concerned that this ends up in the European top court again?
Well, it's quite normal that we have such a kind of new discussions before the Court of Justice. But I've proposed, first of all, to test the new US system, because we will have now, due to the executive order signed by the President Biden, we'll have now a very specific review court, a data protection review court, so a sort of administrative tribunal in the US, and it will be possible free of charge for all the European citizens to have an access to such a tribunal. So my plea is first to test the US system before to have such a criticism. But if it's needed to go to the court, we'll do that. And of course, we will defend the new system, because I'm quite sure that it's a very robust new system, very different in comparison with the Privacy Shield or the Safe Harbor that we have had before. And it was said also by the data protection authorities in Europe. They have said it's very robust, it's a real change. Of course, there are some remarks, and we have adapted our decision to take into account the remarks of the data protection authorities. But now we have a legal certainty. We will have the possibility to work with all the companies. Yeah. And of course, if it's needed, we'll defend our position before the Court of Justice.
It's interesting because just last week, of course, we had a new innovative social media offering announced. We had Threads come here in the United States and in countless other countries, but not in the EU, because Meta feels that the privacy law isn't clear enough for them to be able to unleash Threads because of some of the data sharing between Threads and Instagram. Do you think ultimately the EU will be able to provide clarity for companies that it doesn't stifle innovation for your citizens?
No, we try to promote innovation, and we have a lot of things to do in Europe to promote innovation in the digital world, and certainly about artificial intelligence, the cloud, and other kind of investment is needed to do more. But we want to do that with a human-centric approach. So we want to do that with a real protection of fundamental rights and real protection of the data, the personal data of the citizens. And I was very pleased here in California, I'm in San Francisco, to see that we have kind of the same approach. There's also a legislation at the state level to protect the personal data, and with an independent authority in charge of that. So maybe one day we'll have the same system at the federal level in the US with a privacy law. But for the moment, it's only at the state level, and so it was needed to organize such an agreement with the US authorities to be sure that it's possible to have transfer. But I want to insist on the fact you mentioned a new actor. Of course, it's very important that all the participants are in full compliance with the GDPR. So the legislation in Europe about data protection, which doesn't change the GDPR.
Yes.
We have just changed the access of the intelligence community and the law enforcement authorities to the data with a better protection and a better full respect of the two classical principles of necessity and proportionality if an agency wants to take over different kind of personal data.
Commissioner, we've only got 30 seconds, but do you think the AI Act will get that balance right between innovation and necessary protections?
But we are working on a risk-based approach, and everybody knows that there are some risks with the use of AI. I'm thinking about generative AI. It's very important to give a real transparency, so it's important that the users are knowing that it's possible to take AI as an instrument to organize the diffusion of a new video, a picture, or something like that. But I've seen also different kind of risk in some sectors. transportation system. It's very dangerous sometimes to use new technologies without safety rules. And again, this morning, I've seen a demonstration before here the Parliament in California due to a reaction against autonomous cars. I've tried myself an autonomous car yesterday. But of course, we need to put into place a regulation about the use of such a car.
Yeah. Didier Reynders, so well said. We thank you for spending some time with us, European Commissioner for Justice. From New York, this is Bloomberg Technology.